I'm Peter Theunis, and together with Endava, we are looking into how companies shape the future of payments and fintech. Together with our network, we discuss strategies and technologies and also opportunities, how companies are defining their direction and the future of it. On this episode, we have Leda Glyptis of 10x Banking. We're going to discuss today a review of 2022 and look forward what 2023 will bring us. Now, Leda, can you, first of all, thank you for being with us. And can you first give a little bit of an overview of who you are and what 10x Banking is doing?
Of course, and thank you for having me. I know it's taken some time for us to organize this, but I'm really happy to be closing the year with you. So I guess you'd call me a banking veteran by now. I have grown up in traditional banking, recovering banker, as we call it, and I have worked mostly in transformation IT and client-facing IT. The last few years I've crossed over and I work in software, so fintech, but in exactly the same space, solving the deep infrastructure challenges that our organizations, financial services face in order to be competitive in a truly digital economy. 10x is part of that solution. We'd like to think we're a cloud-native core banking solution that revisits the question of what could your core banking do, what problem does it solve, and how. It's a fully managed service that allows banks with considerable complexity to be truly competitive, scalable, and secure in the cloud.
Okay, interesting. Now, looking back to 2022, it was quite a strange year. I would say we can split it up in two different areas. First half of the year, there was still growth, there was still excitement, let's say, around fintech and payments. By the time that we went to Money 2020, the first news came in, and then the second part of the year, let's say, the economical situation became interesting or difficult, the way that you want to do it. Now, how did you see this trend yourself and with the company?
You are so right. It was very much a year of two halves. What we found is that in the first half of the year, particularly from a payments perspective, from a capability perspective, there was very lively enthusiasm and curiosity around embedded finance. If you ask some of my colleagues and friends here, they would have told you that they expected banking as a service to really take off this year. That hasn't happened. But we could see a next level of curiosity about embedded payments, particularly wholesale payments, embedded finance, embedded insurance. That curiosity didn't necessarily materialize to entities doing much. And as you say, the second half of the year hit us like a speeding train. By the time you and I sat together at Sibos, people were talking about recession quite openly. And it's always a surprise when you hear financial professionals saying the word. It's a bit like the Scottish play, right? You don't actually say the word. But by October, everyone was talking about a recession. And we're facing into next year, expecting one, right? We have war, we have an energy crisis, we have contraction of the economy, we have a looming crisis in China. Everyone agrees that we're going into a contraction and a dip. What we don't know is how long it's going to last, right? So what we're seeing from a 10x perspective is that the curiosity exercise is definitely slowing down. The people who are asking the questions because they wanted to educate themselves are sort of leaving the table. We're seeing certain ambitious programs of work becoming a bit leaner with a longer time frame. We're seeing budgets being revisited, on a couple of occasions pulled, but we're also seeing, for those who are serious about their future, we're seeing immense focus. We're seeing some people double down and say, you know what, it's only gonna get harder. It's only gonna get more complicated. And what I'm also seeing, and you and I talked about it briefly last time we chatted, there's going to be a very interesting battle for talent, because the contraction does mean that a lot of startups will shrink. We're seeing another couple of announcements from major organizations like Plaid, I think was the most recent. 20% is a normal number for these companies to shrink. And it makes sense why they do it, but the amount of talent that will be released into the market, talent that has truly deep digital knowledge, deeply unfortunate for the individuals, deeply unfortunate for the companies that are having to do this, but an immense opportunity for the solvent and growing entities that can now snap up talent and accelerate their own growth. So it's not all doom and gloom, but it's definitely going to be a disrupted first half of next year.
Yeah, and to my, I mean, that's my personal idea. Every issue has his creativity, and there coming new opportunities, create people getting more creative in what they will do and how they will attract. So one of my ideas, and we discussed this also already in the past, is probably if banks play it right, they can get the talent back in that they lost the last years, and probably the strong will survive, and even the strong will win. So how do you see that? Is that a trend also that you see that these people are going back to the roots?
I think so. I think there are a couple of very interesting realizations, right? If you look at any successful business, luck is always a factor. And some of it could be dumb luck, like you got in a lift and you met someone who becomes your star employee, or a historic event happened at a time that it accelerated your business model. And we saw some businesses really shine and thrive during COVID, during lockdown, and others not so. And I do think that for certain businesses, this is a period of great growth. I'm on the board of a fantastic company called Flagstone Investment Management. They're in cash. They're in the savings business. And it has, the business has a very mature and dynamic leadership, right? So they saw the opportunity and said, this is our moment. This is the moment where what we're solving for is most needed. And there will be, and there is absolutely a huge advantage to the businesses that are actually right for this moment in time to really step forward and thrive. And it's unfortunate for the others, right? But actually that's how it goes. That's the boom and bust. So I think we'll see certain businesses that are just the service offering they have is absolutely right for the conditions. They will thrive. We will see others that were at that tipping point in their growth, and they go, you know what, I'm going to wean myself off VC capital and become a sustainable business. But I also think that there will be the flip side of that lack of businesses that were just caught too early, that are actually great businesses and have great talent and a great value prop. It's just they were caught too early. Sadly, that is always in play, right?
Yeah. I was last week on an event, and I told there digital payments is not an ingenious business plan. It was due to COVID that the race comes. So sometimes you have to have the luck at your side, and maybe that's why some people will now win too, because they have the lucky number, let's say. Now looking more to 2023 next year, growth of embedded finance. Will be there to my idea. Non-financial institutions are looking for sources of increasing revenue. And in my expectation and looking a little bit around in the sector is that traditional financial institutions even want to take up this service to large corporates as part of customer loyalty to keep the corporates with them, and that they will offer embedded finance to them. So is this also a move that you're seeing, and what do you think will be the killer product for 2023 in that perspective?
I agree with you, which is going to make for a very short conversation. No, I really do agree with you. I think embedded payments in particular will become the focus for many reasons. And one is that in a recession, you really need to drive down your unit economics, right? And we have proven with the capabilities that we build that the unit economics using cloud native technology are much lower. We're working with some of our clients. As you know, 10x is powering the banking as a service solution for Westpac, and the proof point that the technology has delivered on that unit economic cost base means that, as we announced a few months ago, we're moving into the transaction bank now. Why? Because it's absolutely the sensible thing to do. To say if we're going into a constantly increasing digital capability expectation and compressed margin in a recession, what are you going to do? You're going to cross leverage the capabilities you have to drive that unit economic base across. So I really do think that one of the drivers for embedded finance and embedded payments will be the fact that it's actually cheaper to run. And what we have proven, and it was always our thesis with 10x, is that you should do all of that on one platform. You shouldn't have one platform for corporate payments and wholesale payments, one for retail. And okay, obviously I'm tooting our own horn here because this is the problem we're solving, but we're not the only ones. The idea that you have some digital capabilities, and if you design them properly to be scalable, robust, and secure, now is the time to stretch them across. Because you cannot afford in a recession to run multiple platforms. You cannot afford to have the heavy cost base of a COBOL-based architecture. The demand, as you say, of non-FS players will continue rising. How are you going to compete? By extending your digital capabilities. It's the only way. It's the only way to drive costs down, and it's the only way to stay competitive.
Yeah, cost down is one of the things that I'm also seeing with automation of back office processing, like dispute management and so on. Is this also a trend what you see in the traditional banking back office that in the similar way?
The realization that it can't be avoided is coming. I wouldn't say it's a done deal, because there's complexity. As you and I know very well, there are systems there that are older than us. And that comes with a lot of complexity. But it's my favorite thing, and I've been saying it for the last couple of years. The banks haven't digitized as quickly as the economy around us. But the demands of that economy will only become more complex. And the things that we managed to drag so far into this future won't take us to the next step, particularly when we have to observe our cost base. Because actually, older capability is much more expensive. No, that's true. That's true. So you also touched just before on transaction banking and wholesale banking. There is a big announcement around this ISO 20022 migrations and that kind of stuff. Do you see that having, as I see it, as the core for cross-border payments, that will impact also the embedded finance scene? I think so too. I think, I mean, how many Cybosses have we spent listening to the fact it's coming, and there's a new messaging standard there. But the reality is we need that implementation, and the universal is too ambitious, but like a Catholic adoption, essentially, for embedded finance to be able to flow through. And I know that a lot of this, particularly the ISO standards, is the sort of stuff that non-FS players roll their eyes at and go, well, that's not very interesting. It's like incorrect. It is very interesting. It's also essential, because unless we get the ISO standards right, your embedded payments won't actually be able to be embedded. So all those building blocks are essential. And I do agree with you that the direction of travel has been set for quite a long time. But until you have that adoption, okay. Now, coming already to an end, you as one of the top leaders in embedded finance, banking as a service, what's your prediction? You take your crystal ball on the end of the year and you say, okay, what's now the next thing? What's 2023? So my prediction is that banking as a service won't take off as much as we had anticipated. I don't think it's dead, and I don't think it's... we haven't heard the end of this. I think banking as a service is a big piece of our future, but I don't think 2023 is the year for it. Because the business model is quite radically different to how people make money today. And I don't think that a recession is the year when people will have the mind share. But I think embedded payments will become a big piece for all the reasons we've been discussing, that people will need economies of scale. They will need to drive down their unit economics. They will need to create the ability for volume to be pumped through their systems. And the only way to do that in a way that is in line with the digital economy and financially viable is through embedded payments. And of course, that becomes a stepping stone towards the banking as a service world, because more and more of it is reusable, exactly as we were saying before.
Okay. Hey, Leda, we are already to the end. So I would really like to thank you for your time in your very busy end of the year schedule. I want to wish you already a Merry Christmas and a good start of 2023. And I'm looking forward to see what yourself, because I know you're doing some personal projects, and what 10x will happen in the next year. Thank you for joining.
Thank you for having me.